Hi, everybody. Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania. And guess what? It is March of 2026. And boy, do we have a lot to talk about on this first of the month update. Obviously, what's on everybody's mind, and by the time you see this video, will have been a week into obviously the war in the Middle East. And what does that entail? Well, Monday when we walked in, we saw the S&P down about 1.5% right off the bat. And then we turned around and on Tuesday, we saw another sharp sell-off. You can see by my chart here that right where the arrow is kind of where we are right now. The month of February was a small loss for the month, but so far the sell-off has been somewhat contained, but we are watching a low of 67.21, which is December's low on the S&P 500. And you can see that this week we got down to that level. We bounced off of it. The question is, are we going to test it and go below? And again, 6,500 would be a minus 5% return for the S&P 500 for the year, which is also a low that goes back to the latter part of November as well. So again, the other big story that we have is that how are other indices doing? And if you've been watching our videos, we've been, pounding the table on the fact that we think the Mag 7 trade is over. And right now, there's obviously a lot of downside to the Mag 7 stocks. So look at what's going on out there right now. Again, this is why you have to have a diversified portfolio. And one of the things that we do here at Englebert Financial Advisors is we diversify your portfolio. So you can see that commodity fund ETFs, HGER, which we own for clients, is up over 16% for the year. These commodity funds are structured off of broad commodity indices. Obviously, many of them are dominated by oil, and oil's been moving sharply higher. But you can also see that one of the areas that we really started to rebalance back in February was small, mid-cap, and international. Now, both of those have been coming down with the recent sell-off, especially international. But again, we think that obviously the relative strength is the key to some of these areas for 2026. So we highlighted in yellow VOO, which is the proxy for the S&P 500. And right now it's flat, up a little bit for the year. The NASDAQ is down for the year. And you can see that the Magnificent Seven stocks are down for the year. We think that this is important to pay attention to because we think that there's a lot of opportunities in any other place than typically those Magnificent Seven stocks: Apple, Amazon, Meta, Netflix, Tesla, Google, Microsoft, and obviously, that make up the seven. You could also include Broadcom in there if you wanted to call it the Magnificent Eight. So again, this is what's been performing this year. We think that on any pullback, you got to be looking at this. Now, one of the game plans that we did is that when we came in on Monday, we looked at our accounts. Those that were underinvested traded on Monday in these particular areas. On Tuesday, when the markets were down 2.5%, Tuesday morning intraday, we again looked for opportunities that we could move our clients' money into. Let's talk about bonds. You can see that the flight to safety trade was on. We saw here back in February, bond yields were almost 4.3%. They dropped under 4%. They now have been reversing higher. We are in this bond trading range between 4% and 4.25%. I would not be surprised to see us to go back up to the upper end of the range because oil prices are higher. And one of the things that we've been talking about is that oil has direct correlation to inflation because oil is not only used for gasoline and diesel products, but it's used for manufacturing extensively. So one of the things that's happening right now is that oil prices are going higher depending upon, what's happening in the Middle East. Are they closing the Straits of Hormuz or not? Nobody seems to know, but oil prices have been grinding higher, and therefore everybody's worried about increased inflation numbers. So what's our game plan when you run into volatility like this? And again, one of the reasons why you deal with a seasoned investment advisor is that I've traded through several wars. They're not fun, but they are opportunities to make money if you remain calm. So again, don't panic. Increased volatility during a military conflict is normal. I monitor Twitter constantly. The problem now with the modern day military conflicts is that there's a tremendous amount of information flow. You don't know which parts of it are true and which parts are not. There are rumors about a possible, peace. talks, you could see the stock market rally 1,000 points in a couple of hours. If something bad happens, like a ship sunk in the Straits of Hormuz, you could see the stock market roll over 1,000 points literally an hour. But one of the things that we can do is take advantage of that increased volatility to pick our spots. You got to review your asset allocation. If you have too much in assets that are subject to volatility, you may need to make some changes. We see this all the time. We mentioned the Mag 7, very crowded trade. A lot of clients, not specifically our clients, but a lot of people were out there just throwing money at Nvidia, Tesla, Apple, etc. And those stocks are going to be very volatile because they obviously are very well owned. And if people panic, you may see those sell down farther than what you'd normally expect. Again, the other problem that we see out there is you can't get too negative by watching the news. At some point, whether it's this weekend, next week, next month, 6 months from now, the military conflict will end. We remember the first Persian Gulf War. General Schwarzkopf was interviewed after the war, and they asked him why it took 9 months to build up men and material. And he said, well, he wanted to have an overwhelming advantage. And obviously, the first Persian Gulf War was over in about a month and a half, almost 2 months. One of the news items that a lot of people forget back then is that when we started the first incursion, all of the planes came back without any damage or anti-aircraft fire. And when that news hit the tape, the Dow Jones back then opened up 100 points, which in today's Dow would be about 1,000 points. So again, you got to be very careful watching the news. They're trying to keep you watching the news, so they will sensationalize every bit of news out of the Middle East. So again, if you're concerned, feel free to talk to us. We've been very cautious going into this year for a lot of our clients. We thought that there would be some volatility. If you watched our previous videos, our December and January videos, we talked about our outlook for 2026, and we said that we expected some volatility in at least the first half of the year. Obviously, we're getting that. So again, if you have any questions or concerns, give us a call. If you download my app by texting Chris E, CHRISE, to 36260, it's a great way. This slide deck's on there. This video will be on there. And it's also a great way to contact us. So again, it's first of the month update for March. Let's see what's happening by the time we get to April. Everybody take care. Stay dry. We'll talk to you soon.